Hi, this is Quantribe. Welcome to my channel. If you use TradingView long enough, you probably know that it is full of fake and repainting strategies. And what I mean by fake strategies is that you probably saw like amazing strategies with perfect performance in on backtesting, but if you try to trade them in real life using kind of live data, you most likely will lose money, or at least you won't have even close performance to what you see in backtesting. So here in this video I will show you 4 different tricks that are probably responsible for like 99.9% of fake strategies in TradingView, and I hope that by the end of this video you will be able to detect these fake strategies successfully and avoid them. So first let's look at probably most famous kind of back of TradingView. So it is for version 2 of PineScript and getting data from higher time frame. So basically here I have a Bitcoin USD pair, 5-minute chart, and here I have very simple code that basically just gets data from higher time frames, so it gets close from daily chart. And after that I have 2 very simple entries. So I enter long when my current close of the current bar is below my daily close, and I go short when my close is above daily close. So problem with that is that in version 2 of PineScript, by default, you will get your close from the future. So if you're now in the middle of the day, in backtesting, you will get data from daily close, and well, of course, you cannot get this in real life. So let's try to add this to chart and see how it performs. You can see it's just very simple, but we have almost perfect strategy, and of course, it works just amazingly. You can see here you have just amazing performance, but it won't work for sure. So try to see, just to try to check if you have version 2 of PineScript, and if you have security functions that get data from higher time frame, be very careful. Most likely it won't work in reality. So, and unfortunately, just version 3 and version 4 of PineScript won't guarantee you that this stuff won't work there as well. So in version 4, for example, you can have the same kind of construction, but you need to add kind of another argument. So it's look ahead equal true, but functionality will be the same. And if you will add this to chart, you will see the same performance. So if you have, even if you have version 3 or version 4 of PineScript, look at security function as well. And if you see look ahead stuff, be very careful as well. So now let's go to Renko chart. So basically in trading, you try not to run any strategies on not default kind of candles. Problems with that is that open, high, low, close of these candles are calculated and are not real. So for example, this Renko chart is built on top of daily open, high, low, close values, and of course, kind of one day for Renko is just, if it's like green candle, if you have on daily chart green candle, it will be just series of green candles. And of course, it's quite easy to create a strategies that will work very good in this kind of condition. So basically, here I have a very simple strategy that on the first kind of a green candle, it go long, on the first red candle, it go short. It's quite simple, and of course it will perform very good, but in reality it won't work. So as you can see, we have amazing performance, but it's not real. Problem is that price just don't go this way. It can go, it can fluctuate quite a lot here, and of course we won't get the same performance trying to trade it in reality. So please try to avoid Renko charts and strategies on Renko chart. You can use Renko to analyze stocks, to analyze your chart, but try not to apply any strategies to Renko charts. It won't work. So pretty much the same problem we have with Heiken-Ashi candles. So problem is that Heiken-Ashi open, high, low, close values are calculated, and when you apply your strategy to Heiken-Ashi candles, your performance, your entry points, everything is calculated based on Heiken-Ashi open, high, low, close values. But problem is that these levels might not be available anymore. So basically, if you look at Heiken-Ashi candles, every candle starts from the middle of the previous candle. This is kind of the rule. This is definition of Heiken-Ashi candles. But of course, in reality, it might not be this way. So if you have a signal and you enter at that open, but this open won't be available for kind of real candles. And here, for example, I have simple moving average cross strategy. Very simple. Let's add this to chart and we'll see quite good performance as well. You can see it's quite nice. We can try to trade it, but it won't work. So if you want to base your strategy on Heiken-Ashi candles, what you can do is inside the code you can get Heiken-Ashi values, open, high, low, close. You can base your signals based on Heiken-Ashi candles, but you need to apply strategy always to usual candles. So as a rule, try to use only strategies based on usual candles, and this will actually allow you to avoid quite a lot of different fake strategies. And the last thing I want to show you is trailing stop loss strategy. So in TradingView you have very nice kind of feature called trailing stop loss kind of levels. What does it mean is that it actually allows you to put your trailing stop loss when your price, for example, you have kind of long signal, then I wait for a certain amount of points to activate my stop loss level, and after that I have an offset of also certain amount of points that will allow me not kind of to lose money and to have my trailing stop. And well, it's nice in theory, but it's not kind of realistic in TradingView. So what I mean by that, let's add this stuff to chart. As you can see, it's very simple in my code. So basically, for every candle, on every candle on my chart, I go long, and after that, I set my trailing stop loss to 400 points and my offset also to 400 points. So it's super simple. And as you can see, because my trailing points is relatively small to my candles, I will always make money. So as you can see, we have just perfect strategy, 100% profitable trades. And if you will zoom in, you can see that everything is happening inside one bar. So basically we enters at open and we exit at the top. So it's just perfect. Why is this happening this way? Well, problem is that when you apply something on, for example, daily chart, TradingView knows only open, high, low, close values for this daily chart, and that's it. So it actually doesn't know what's going on inside this bar. If you run backtesting, for example, for green bars, it assumes that price goes from open to low, then to high, then to close. That's it. There is no movement for TradingView besides these movements. And of course, if you think about trailing stop, for every green bar will have just amazing performance, because it always goes to the top and after that it descends to the close. That's what we want, and it's not realistic. So I assume that you can use trailing stops, but try to use them on lowest time frame possible, so that your trailing kind of level will be relatively big to your candle, and this way you can be sure that more or less it will be valid. So I think that's all for this video. I showed you like 4 different kind of tricks that people use to show kind of amazing performance in TradingView. I hope now you know a bit more about this stuff, and you will be able to avoid all these fake strategies and save you a bit of the money. So thank you for watching. See you. Bye.